see and like to hear, though, is which ones are working and where we're seeing that unusual activity. So here goes. Microsoft is the first one of our 3 at 3 today. By the way, disclaimer, you need to understand that what I'm about to tell you is for informational and educational purposes only. And if you'd like to reproduce it, please, before you do that, ask us, because we have registered marks, trademarks, patents, and copyrights on virtually everything I'm about to talk about. So please, before you reproduce it in any way, shape, or form, ask us. And then we'll be happy to grant you that. And we just ask that you cite Market Rebellion. By the way, here at the Four Seasons in Costa Rica, Papagayo, man, what a beautiful place. If you get a chance, don't miss out. Anyway, here goes. Microsoft. So Mr. Softy, bullish call buying. How bullish? 25,000 option contracts. That's how bullish. That's pretty dang bullish, folks. 25,000 contracts is 2.5 million share equivalent. That's a ton. And I think we should all be following smart money. This is indeed smart money and big money, because they paid from 32 cents up to $1.94. In other words, they ran the stock, chasing it higher and higher and higher. The more options you buy, the more you force people to hedge. And I think that's a lot of that volume that we're seeing in there. But nonetheless, this is a very big trade. Those January 225 calls that expire in just 2 days. So we've got Thursday and Friday. That's it. These are Jan 22nd, 225 calls. Bang. Watch that one closely, my friends. Also, there's 10,000 of the January 29th. That would be the following Friday, not this Friday. That's the really big paper. But next Friday, they traded a 10,000 lot, which is a million share equivalent. Wow. So that is going on in Microsoft, and the shares were trading 224.92. So it was just beneath the strike price in both cases, because they're both 225s. The big one expires this Friday. The second one expires next Friday, the 29th, but they're both at the 225 call strike. Bang. All right, let's take a look at another on our 3 at 3 journey today. Nvidia, NVDA, bullish call buying. They bought 6,000 of the 29th of January expiration. So that is, of course, 29th of January, figure a week and 2 days. So want to call it 9 days. I'm not going to quibble. They're buying at the 550 strike. So January 29th, they're buying the 550 strike calls. They paid $4.50 up to $6 for those calls. So that's an expensive call, as you might expect, because we're talking about a stock that is trading $532 a share. So that's big paper, because again, 6,000 of those, 6 times 6, that's $3.6 million, folks, because every option is for 100 shares of stock. So $6 is $600. You multiply that by 6,000, and you get the idea that that's a big trade. Also worth noting. So first one, Microsoft. Second one, Nvidia. Let's get to a third of our 3 at 3. Bang. UAA, which is Under Armour. UAA, bullish call buying this morning in Under Armour. They were buying 9,800 of the March 20 calls. So much more time than those first 2 examples I gave you. March, obviously out there 2 full months into the future for those expiration. And they bought them for $1 all the way up to $1.25. So March 20 calls with the stock at 18.5. So these are out of the money. You guys know that I like buying at the money and selling out of the money, because I find I do better, and I hit for average. I can swing for the fences too, but I like, since I've got a lot of positions on, I like putting on a position and mitigating time decay, volatility, compression, all that kind of fun stuff. So that's what I do. You have to decide what's appropriate for you. I'd say that earnings are estimated on the 9th of February. So that's within this time frame then, folks. In other words, Under Armour earnings, the 9th of February, it's when they're supposed to be coming out. And these are March options. March 20 calls Again, $1 up to $1.25, 9,800 times. You get the drill. This is $1 million trade as well. Now, before I give you the final, because I'm going to throw in a bonus for you today. How about that? Before I give you the bonus, I got to say, check out marketrebellion.com/get started. marketrebellion.com/get started to learn all about trading cryptocurrencies, which are crazy. The opportunity there is immense, but you need to understand how to do it, folks, effectively. So if you want to learn about cryptocurrencies, if you want to learn about trading stocks, options, futures, come on over to Market Rebellion. Then you'd be sitting down here in the Four Seasons, perhaps. Maybe some of you have already been here. I hope you have, because this is a special place. All right, that said, here's that bonus, fourth trade right now. Fourth trade is Lennar, LEN, bullish call spread in Lennar. I love this one. They bought 6,000 of the March 85 calls with the stock at 81. So again, they're buying it out of the money. 85 is the strike price. March is the time frame they think something happens between now and March. So they paid $3.65 for 6,000 of these. That's give or take $1.8 million to $2 million trade, folks. So that's why you want to be following that kind of paper. I certainly am, and I did, and I'm back in a home builder, and I love this trade. Stock was 81.18. They paid $3.65 for these March 85 calls, well above the open interest. Bang! Thank you, folks. Thank you for joining me today. I hope you have a great day wherever you are. I'm going to be hitting the beach, which is right out there, in just a minute, but I'd say make sure that you always do a little something to mitigate risk. That's one of my rules. Another one is always take profits. Be just as disciplined about taking profits as you are disciplined about cutting losses. If you do that, you'll be in this game a long time. By the way, let me show you what I'm looking at right now. That's where I'll be heading out to in just a few moments. So with that said, thank you very much, folks. Thank you for joining me. Tell a friend about 3 at 3, and hopefully I'll be back with the slides tomorrow. Otherwise, I'll be back here at the bar.